Let me introduce our esteemed panelists to you. We have Roman Matovsky from Black Sea Trade and Development Bank and Ahmet Yakar from ICBC as a managing director. So, I mean, maybe the panelists can introduce their institution and themselves.
Hello, everybody. This is Ahmet Can speaking from ICBC Turkey Investment Banking Project Finance Department. I first of all wish you a good year 2021. A little bit late, but at least I can celebrate in advance the Chinese New Year, which is coming, as representing ICBC Turkey. As you know, ICBC is in the Turkish market for the last 5 years. I'm in this good bank for more than 4 years now. As ICBC, maybe some of you know, we have participated successfully both infrastructure and energy deals, which we will about to elaborate. So thank you for EEL events for this organization and Said for his moderation. So that's on my side, Said.
Thank you very much. Roman.
Good morning, everyone. It's a pleasure to be here, and I welcome everybody to the session. Yes, the Black Sea Trade and Development Bank is a multilateral development bank focused on the Black Sea region, and Turkey prominent in this region. Apologies,
thank you very much.
But I'm getting feedback of my own voice coming back, so I think there is a technical issue. Yes, the Black Sea Trade and Development Bank is focused on the Black Sea region, and Turkey is prominent within that, and one of the largest countries of our operation. And the biggest part of our portfolio happens to be always in Turkey. And we are focused on all areas of energy and infrastructure, and in the energy side, we have had a number of investments and continue to have a number of investments in Turkey. A lot of it has more recently been focused on renewable sector, but with some of the things going on in the ending of the feed-in tariff and the Yekdem tariff, we foresee that will be more challenging going forward. But we remain committed to this sector and to Turkey, and continue to look at all opportunities to finance projects there. As a development bank, we are primarily lenders in terms of long-term financing to medium and large infrastructure projects, and look to support sponsors and help bring in foreign lending and best practices to the projects. Thank you very much.
Thank you very much for the introduction. So, let's start with the first question. I mean, I will direct that to you, Roman. So, from your perspective, how did Turkey's energy sector tackle these global shocks, and how did COVID-19 impact the outlook for energy investments in Turkey?
I think Turkey, as everyone, has had difficulty in managing with COVID. In some ways, it has managed it well, because obviously demand, Turkey being a net importer of energy, and therefore the price shocks that we experienced in the oil and gas, primarily in the oil sector, have been beneficial for all markets. And gas, in demand, on the demand side, has also been beneficial in terms of the shocks on that side. But similarly, it has had an effect on the revenues and so forth to the state, and that is something that Turkey, as all countries, is having to deal with. With regards to the energy mix, that has been somewhat more beneficial to the renewable sector, which has benefited in terms of increased capacity in the last year, as opposed to other energy sectors. So it's the only one that really had grown in 2020, but that is partially because of projects coming on stream that were already pre-planned or in construction, and we continue to see that. But with the let's say the Yekdem tariff and the feed-in tariff sort of finishing by 2030, there's a lot of questions what's going to happen after that? What's going to, precede that? What's going to succeed that? And that is really the big question, because right now, the banks and financial investors knew that, the type of pricing, at least you had a fix for, let's say, the first 10 years of your project. Going further, you're subject to market pricing. And the question is, what's going to replace that? Is it going to be an auction system? Is it going to be a base floor price? Just relying on merchant pricing or commercial PPAs is a totally different question for investors and banks. And I think that becomes a big question going forward of what's going to replace that in terms of the renewable sector. But it's therefore a lot of focus. I think these days people are focusing on other areas in the energy and infrastructure space, particularly in the energy space in Turkey. You have distribution, a lot of distribution opportunities still coming up. You have the offshore, as it was talked about in the earlier session, touched upon in the earlier session. There's a number of the Black Sea is being looked on itself as offshore opportunities, as well as East Med, which we've all heard about as well. Thank you.
Thank you very much. Quite insightful view on this one. So, moving on that one, Ahmetcan, what are the main risks and the market sentiment for the Turkish energy sector in light of the COVID? I mean, is liquidity still available to promote growth for the Turkish market?
Thank you very much, Said, for the question. In order to briefly explain your question, due to the worldwide effects of COVID-19, as you know, energy companies concentrated on, actually what we witnessed is they keep on their infrastructure running safe and reliable on energy supply, because regardless of the problems that we face with our health, if the energy will be shut down or we'll have some shortages, then it would be also bad for the country. So in this regard, what we observed is that the company's main target in this year was to actually keep the places running. So starting from June, we observed that the electricity demand started to increase and reached pre-COVID-19 levels, with loosening the restrictions in the summertime, as you all know. And according to TEİAŞ, Turkish Electricity Transmission Corporation, the report dated on June 2020 actually says that the effects of COVID-19 in base case scenario, electricity demand is expected to increase from 329 TWh in 2020 to 466 TWh in 2029. So on an average, actually, it makes 4% of a yearly growth. And in addition, energy deals and tenders have been slowing down, as I told you, because of the pandemic. And but we think a recovery will be in place in 2021, especially with the vaccines being rolled out by many governments. There's Chinese also vaccine, which Turkey is currently importing. And we believe there will be a momentum gain at the deals and tenders with the spread of the vaccine actually to everyone, hopefully as soon as possible to all the society, all the people around the world. So as an example, due to COVID-19 pandemic, new tenders could not be completed or realized on the planned dates, just like such as mini energy YEKAs, in Turkey market. And as a result, when we look all these effects, we see that there is liquidity, but money is a little bit now cautious for also Chinese money, we can say. So as a result, new Turkish and foreign investors are expected to have their appetite once again for the energy sector, with the future of actually the clarification of the future of YEKDEM. And also, Turkey has a 2023 vision for energy as well. So if that would be redesigned or declared for the upcoming years after the 100th anniversary of Republic of Turkey, I think this will also positively impact the liquidity for a growth in Turkey market, which I think we have a way to go both in the renewable side and on the fossil side. So these are our observations for this year and for with regards to liquidity.
Thank you very much. I mean, you both talk about the feed-in tariff importance of the Turkish electricity market. So Roman, my next question is to you. So knowing that it's going to fade away sooner or later, what institutional arrangements could contribute to attract more investments for sustainable energy projects apart from the currently available YEKDEM, based on your experience as a bank? And would you like to also share your experience with respect to the project financing arrangements for the energy sector?
Yes, this question was to me, I guess, right?
No, to Roman, actually.
Okay, apologies. There is just a line connection, sorry.
Yes, I think I understood the question. Obviously, bankers and investors want certain level of certainty when they're investing, and when you have a fixed feed-in tariff that provides a lot of comfort for banks, particularly since in the previous regime it was tied to the dollar. The YEKDEM was tied to the dollar, so therefore allowing to sort of understood a floor in terms of pricing, and you had a certain level of risk. Obviously, there was merchant risk after the year 10. I think that's some sort of certainty in terms of the PPAs will be extremely important going forward for the banks and investors. There's been a lot of downward pressure on the Turkish lira, which we've all seen, and it thankfully has not translated to the existing projects. If it had, for example, a lot of the projects may be underwater or having significant problems. Obviously, it has some effect on the budgetary process, and so far it has been absorbed. The question is going forward, if these type of issues are not absorbed or whatever is to be held by those risks to be held by the sponsors or the institutions involved in the projects, that becomes a significantly different risk than what we've been doing before. So therefore, one has to evaluate that. I think it will be much more challenging. Having some level of certainty is paramount and foremost that's required in terms of things going forward. Thank you.
Thank you. Also now, your turn. As a key player in the Turkish financing market, who often works with cross-border investors, obviously, from your perspective, what government incentives and support mechanisms should be offered to the international players to promote energy investments in the Turkish market, and which policy actions need to be taken?
Thanks, Said. As I see, actually, when we look at the history of us in Turkey for the last more than 5 years right now, we have also provided an important level of support to energy deals in Turkey, as I told you, both on renewable end and the fossil end. The thing is, what we have came out with the last 5 years is actually would drive our strategy for the coming midterm. And with regards to your question, of course, as a new money in the market and a little bit more cautious on the deals, looking for like the idle structures in the deals, we see that we would always be in a favor of to have some kind of a mitigant for the revenues, especially in dollar terms. And when we look at, even though the prices, the average market clearing prices in Turkey, it is rising. However, due to the depreciation of Turkish lira, it is hard for the foreign investors to make their FDIs while having less returns than they have in other countries in the emerging market. In this regard, our first opinion would be that in order to promote the energy investments in line with the policies in Turkey, it is a necessity still, for the midterm at least, to have the tenders with somehow a mechanism that will be linked with the that will actually mitigate and hedge the fluctuation and volatility risks. And this can be an escalation mechanism, this can be a CPI and USD CPI and Turkish CPI mix algorithm, but somehow the foreign currency issue shall be put a light on to the foreign investors. So this is number one. Number two, as you know, Turkey is located in a very strategic geography between a number of major energy supplier and consumers, as well as the natural gases. As you know, that is one of the hot topics in Turkey and the surrounding countries actually. So actually it makes Turkey and the region as a hub. So in this regard, due to also the fact that the current account deficit relies heavily also on imported energy and natural gas and etc., dependency on the foreign energy resource should also be reduced. Actually, this is what the renewable energy is coming from. So actually, renewable energy program is coming from. So the thing is, what shall be done at the end of the day? The natural production capability of Turkey shall be utilized more and more, including not only renewable but also for the fossil part, coal part, etc. And moreover, in order to reach the 2023 energy target, investors' favorable incentives such as the purchase guarantee and feed-in tariffs, as I say, connection priorities, license exceptions, etc., depending on the type and capacity of the energy generation facility should be in place. And as ICBC Turkey Investment Banking Project Finance Department, we are dedicated to form these tailor-made solutions for the long-term financing needs of our clients and support projects that create positive impact, both economically and socially, to the society. So in this regard, we will always be a bridge between Turkish and Chinese financial markets, present Chinese EPC contractors and investors to Turkey and the peripheral countries. And Chinese companies do also have a potential to target some companies, both also in infrastructure and energy in Turkey, in order to create a considerable value for the corporation and accelerate trade between China, Turkey, and the surrounding countries. So as a summary, Said, unfortunately, we still would require some sort of support mechanism, a PPA, whatever you want to call, a CPPA maybe, for the midterm, in order to attract a little bit more of the foreign investors in the unsaturated market. Thank you.
Thank you. I mean, just coming on that one. So that's one of the criteria that I think that most of the banks are requiring. And now we have our other panelist, Francisco. Hello.
Yes, hello everyone, and very sorry for the late connection. I had some technical issues trying to connect to the panel. Apologies for that.
No problem at all. I think just like now you are on board, I can just direct you your question as well. So I mean, how do you assess the availability of external financing for Turkish energy market in the wake of COVID-19 crisis, and also concerning the increasing interest of green energy funds, IFIs, and Asian banks for the region, in particular for Turkish green energy projects? What steps the project developers and sponsors in Turkey take to secure cross-border financing and tap for liquidity?
Well, I mean, this has been definitely, and thank you for the question, a typical year in terms of investment and activity in the financing sector and the financing of renewable energy projects. But it's nevertheless the reflection of a trend that we have observed over the last few years. We have seen that the investment, according to Bloomberg New Energy Finance, has gone down from 3 years ago, $3.5 billion to less than 1.9 billion in 2020. I think we may have some signs of recovery in the wake of COVID crisis, and we may see capital flowing again, especially towards the solar and decentralized solar generation. But I think there are many obstacles that a financier like ourselves or like the commercial banks try to mobilize, especially foreign banks, could be facing in this market. We, as an IFRS 9 institution, we would definitely be constrained by the rating of the country. So this has been perhaps one of the main hindrances or main obstacles to mobilize capital, simply because of the level of provisioning that banks and investors have to make when investing in this particular market. I think also the uncertainty, the lack of certainty on the support mechanism, and probably that has been a running theme so far in the discussions in this panel, is one of the elements that have also created a bit of reluctance to invest. But we still can see that there is financing available. We have seen, especially financing coming in at corporate level. We have seen large facilities being drawn down recently and being arranged, especially just with commercial banks, where we, in this case, as an IFI, like BSTB, like EBRD, or other large energy investors in this market, we have not necessarily had to play a role to master this support. So we can see that there is appetite, but it's not perhaps the right type of risk at the moment for many commercial investors. We also see that the local market seems to still take a big share of the financing in this type of energy projects. Not a bad thing per se, and it's very encouraging that we still can see liquidity flowing, but it's perhaps symptomatic that the specific market knowledge is still very important in the determination whether a project is suitable for investment or not. So that makes us think. I mean, what makes it so difficult for projects in Turkey and in this market to compare to other jurisdictions which are attracting a lot of interest nowadays, and they are able to mobilize large amounts of financing. So I guess it boils down perhaps to the factors I mentioned before: the uncertainty in the market, the fact that the support mechanism might be shifting towards a local currency solution, which isn't ultimately quite necessary given the state of the finances, and also the fact that perhaps investors, especially investors in the renewable energy and lenders, might not draw so much comfort from a feed-in tariff-based system, might prefer the reverse auction system. A lot of the market has been moving towards the reverse auction, and I believe that this is where there will be more potential in the future. We have seen some quite positive results in the last WindJeka, for instance, and this is an area that is very encouraging. So I hope that this gives a bit of an overview, and I would be happy to answer further questions on this subject.
I think this will be more like a general question to everyone. I mean, since you summarized, actually, all of the panelists are summarized, like, replacement mechanism, feed-in tariff is one of the key criteria for, in particular, international banks to invest in the Turkish energy market. So would you mind also, telling us what would be the other, criteria which, both from IFI and commercial banks' perspective, that you will be looking for when investing in the Turkish market? I mean, maybe starting with Roman and then move to Francisco and Ahmetcan. Roman, can you hear us?
Sure. Yes. I mean, yes, I can hear you. Apologies. I'm still having multiple recordings of hearing things. So let me just take off my headphones.
On Roman, yeah.
I will speak slowly and clearly. Yes, I mean, I think, as I said earlier, there's a level of certainty that's required, and obviously for banks being relatively conservative, they need to set a banking case on which in a base case in which one can understand with a certain level of certainty that certain things will happen, and therefore be it through an auction-based system in which a floor is set for the PPA, or a flat feed-in, a minimum feed-in tariff. There's different approaches being done by various countries in the region as people are moving away from straight feed-in tariffs. But that will have to be clear, and will have to be concise so that there is some level of certainty, not only from a minimum price standpoint of view for at least a minimum period of time, but also in terms of exchange rate or ability to hedge that exposure in a proper way. If there's not a market to be able to hedge that, then again you're dealing with local currency exposure, and we've known what has happened with the Turkish lira in the last months because of these type of situations. So I think those are the two main factors. I think there is an interest from the banks, particularly from international banks, in terms of supporting Turkey in that. Obviously, one element that some of the banks have issues with is local content requirements. If some of the EU financing, or I know EBRD or others have issues with local content requirements that provide sort of beneficial terms for a certain amount of local content, and that is sort of deemed as preferential pricing. That can be also counterproductive. But there is definitely an interest from multilaterals like ourselves or others, or in international commercial banks. When we look at Turkey, I can see there's always a high demand from international banks. Also, it's very competitive from local banks. Not always for longer tenors, but the local banks are always very much interested to support their local sponsors. Thank you.
Thank you, Francisco. Anything further to add on this one from your perspective and your institution perspective?
Yeah, thank you very much. I definitely second what Roman says, and maybe from the IFI perspective, the aspect that I would not forget about, and sometimes multiple projects that present this type of issues, is the environmental and social elements. When we are looking at an industry that is becoming every time more standardized, that it's renewable energy assets are becoming more commoditized. They are assets that you can warehouse in vehicles, that you can invest for a defined period of time and then transfer to another person or to another investor. This requires a certain level of quality, and then a very good sign of this quality, a very good sign of how the project has been prepared, is to which environmental and social standard it has abided. When you finance with an IFI, you normally have that by definition, but you have to also make sure when there is no IFI in the picture that you're abiding by some standards like Equator principles, etc., and that you also have a good environmental and social management system, so that reduces the uncertainty when you transfer the asset, when you dispose it, and when you want to attract maybe investors when the asset is sufficiently the risk, that once you have already the project finance in place, etc. That is a good element to consider. It can lock in a certain value of your project that otherwise you may have to cover in other ways. I mean, you may, if you try to sell an asset that is not up to scratch in terms of environmental and social baseline work, you might have to face a discount, and that might not be so palatable. So that is something I would definitely encourage when preparing projects, and especially when preparing projects, having in mind their subsequent transfer after COD to other investors.
Thank you. Lastly, Ahmet Can, anything further add from a commercial lender perspective?
Yes, after hearing from the good representatives of the IFIs and MDBs, I think from commercial point of view, first I would say, Said, as an international commercial bank, the first thing that we would look for is actually the environmental and social impact, even though we are not an IFI or MDB, but we are still a citizen of this world. So we also take a very good look at these issues, because in order for the sustainability of the debt service repayments to be made, the first thing that has to be done is the sustainability of mankind. Therefore, if we are bringing drought to a place, if we are changing the bird migration routes, or if we are cutting the trees or destroying the environment, then of course, as a commercial bank, we will not be willing to or inviting any other investors or EPC contractors to the deal. And on top of it, I think we can divide this into two parts. One is the construction phase part, and the other one is operational phase part. In the construction phase part, actually pre-construction, what we would look is definitely the how much the government supports, because as ICBC Turkey, we are not only doing business in Turkey, but also peripheral countries. So we first take a look at how the laws, legislations are being set and supported, both for the sponsors and the lenders, for the continuity of the project to be feasible and bankable. On the other hand, we of course look at the sponsors' capability and their history, whether they did a project like this or they have a good partner. So this is something that we would also look for. And on the operational period side, Said, actually we would like to stabilize or make a very conservative case of the revenue flow, especially hedging the debt service repayments that we will get in the currency that we have provided the loan. So the local currency versus the currency of the loan is always a point that we take a good look at, and how we mitigate those. And of course, the OPEX control tools are very important. Therefore, O&M contract is very important. And the other thing that we look at a commercial bank is the shock sponsor, like how the sponsors and the project is responding to the shock waves of in the project, which is sensitivities. So these would be the main items that we would look for the projects, energy projects that we would be willing to participate or invite Chinese investors in our case.
Thank you. Thank you very much for the contribution of the panelists. I mean, that's all from the session, unless any of the panelists would like to add more on top of what we've spoken.
I think nobody.
Nobody said.
Wants
Thank you very much for everyone.
Yeah.
Okay. Said Bey, thank you very much for your moderation.
Yeah. Thank you very much. Happy to answer any questions that come up. Thank you.